Hey, welcome back everyone to day 115 of our live challenge. Are you joining us live or catching the recording later? As parents, we all dream of giving our children the best possible future. Nelson Mandela once said, education is the best powerful weapon which you can use to change the world, and that journey starts with a strong educational foundation. But let's face it, education costs are rising every year. So the question is, how can we plan and secure our children's future, both education and maybe even their wedding someday? Today, let's explore how mutual funds can be a powerful tool for securing your child's future, particularly for their education and marriage. What are mutual funds? Think of a mutual fund as a pool of money from many investors like yourself. This money is managed by professionals who invest it in various stocks, bonds, or a mix of both depending on the fund's objective. Essentially, you are buying a slice of a diversified portfolio, which can be a great way to grow your savings for your child's goals. Now, let's look at the benefits of mutual fund for children. First one, it gives you a long-term growth. Mutual funds have the potential to generate higher returns as compared to traditional savings. It helps to accumulate a larger corpus for your child's needs. Second benefit is power of compounding. Starting early allows you to leverage the power of compounding, where your returns earn additional returns over time, significantly boosting your savings potential. Third benefit is professional management. You don't need to be a stock market expert. Experienced fund managers handle the investing, saving your time and research effort. The fourth benefit is disciplined savings. Setting up systematic investment plan, which is SIP, allows you to invest a fixed amount regularly. It builds a habit of disciplined savings and mitigating market volatility. The fifth benefit is diversification. Mutual funds offer built in diversification. It spreads your investments across different assets, which help reduce risk as compared to investing in individual stocks. But there are some drawbacks to consider. First one is the market volatility. Mutual funds are subject to market risk. You must have heard this many times. The value of your investments may go down in the short term, but with the long term horizon, the risk tends to be even out. Second drawback is no guaranteed returns. Unlike fixed deposits, mutual funds don't offer guaranteed returns. However, the potential for higher growth over the time can outweigh this drawback. Now, you may ask, which are the best mutual funds for children? Not one size fit is the answer. So, the best mutual fund depends on your child's age, your financial goals, whether it is education or marriage, and your risk tolerance. However, there are two main categories to consider. The first one is the balanced fund. These invest into a mix of stocks and bonds. It offers a balance between growth and safety. They might be suitable for education planning where you need the money in a specific time frame. Second, you can consider is the equity funds. Little aggressive growth here. These invest primarily in stocks. This aims for higher long-term returns. They might be a good option for marriage planning if you have a longer investment horizon. Now a question for you. Would you prefer a more stable option or one with the potential for higher returns, even if it carries slightly more risk? Okay, let's go ahead. So, now, what are SIPs for education? Should we do it? Yes, a big yes. Regular SIP contributions, even with small amounts, can accumulate a significant sum over the period. Starting early allows you to benefit from compounding and potentially reach your educational goals comfortably. Now, let's look at, a real world example. Suppose, uh, Using a simple calculator, you can see the power of SIPs. Imagine you start an SIP of 10,000 per month for your child's education. Starting today and you continue it for 15 years. Assume an average return of 12%. Uh, you could accumulate a corpus of over 50 lakhs rupees in 15 years period. But there are certain limitations of children's fund. They are specialized types of mutual funds with a lock-in period. Maybe 5 years. While convenient, they may not offer the same flexibility in regular funds. So, are children's funds balanced or hybrid funds? Children funds are normally categorized as hybrid fund as they typically invest in a mix of equity and the debt instruments with the bias towards equity for the long term growth. Now, why choose mutual funds? Mutual funds offer a convenient, professional, and potentially high return to secure your child's future. Remember, planning early is the key. So, next, what are we going to do? Consult a financial advisor to discuss your specific needs and risk tolerance. Research different mutual funds and choose the one which aligns with your goals. And start an SIP today and watch your savings grow. By planning and utilizing mutual funds effectively, you can ensure your child's future is bright. Happy investing. Bye.